Hi, everyone. Tim Lemoine, manager at Risk and Insurance Associates. We're joined again with Kourtney Zando, our DI specialist. Kourtney, thanks again for joining. We wanted to talk about educating our clients, number one. I think it's really important that we're educating their clients on what they have and what they don't have, or what they think they might have and what they don't have, right? Because if we do face that disability event, we want to make sure that we're prepared for that. So I think we have some good tools on educating our clients, especially versus what they have in a group scenario, if they took their group disability benefits, and then what they're actually going to receive from that, and why it's important to piggyback it with an individual plan. Because just because you have one doesn't mean that you're completely covered. Is that correct?
Correct. Thanks, Tim. And hi, everyone, again. So again, from a group coverage standpoint, when you're asking your clients if they have group coverage in force, make sure you're asking those next questions as to what they have. Again, lots of times their group coverage is going to be taxable. They cannot take it with them should they leave their employer, or maybe their employer just drops benefits. That disability coverage will go away. Typically, your bonuses, commission, sometimes RSUs, so restricted stock units, are not included in the group coverage amount that your employer is providing you, which makes a huge difference in our higher income earners, especially when there's caps on those policies, which there typically are. So we always like to supplement it with an individual policy. Again, your benefits will be tax-free because you're paying for the premium. That policy will go with you wherever you choose to go, whether you stay with the same company for the rest of your life, or maybe you change employers as well as your occupation. Bonuses, commissions, stock units, we can include all of those as well into your income on the individual side of things. And then it's fully customizable as well, so we can add features that fit your situation and scenario, rather than just here is your group plan. I would never recommend that people do not take their group coverage through their employer. It's the most cost-effective option, but we have other ways to supplement that.
Yeah, so I think early on in everybody's career, or even later in your career, if you're just not comfortable with the product, and somebody says to you, I've got that through work, we shouldn't just stop there, right? So we should definitely dig a little bit more and learn to take that time to educate our clients. Can we break this down a little bit as far as what that means and all the taxes and how it works out through the group plan?
Of course. So we can look at, let's just say that this client in particular is making $200,000 a year. We're assuming that they have a 30% tax bracket. So should they, every single month that they're taking home their income, right, they are looking at, after taxes, about a little under $12,000 a month. That's what they're used to living their lifestyle on. That's how they're paying their mortgage, their utilities, their groceries, based off of that income. Should they have a disability event, which makes them unable to work in some capacity, whether that's a sickness or an injury, their group benefit is 50% of their income. So typically clients will think that they're getting that full 50% of their income coming into their pocket tax-free, when in reality, because in most cases your employer is paying for that benefit, you're really looking at a little under $6,000 a month. That being said, this is a perfect time to ask your client if they can sustain the same lifestyle with half the amount of income that they were used to taking in. Usually when they're seeing it in perspective, they will almost always say no, in which case we have a solution for them where we could supplement that, whether in this scenario, we can get up to another $5,000 a month to make them essentially whole again. But we can, again, always scale that back just to fit that client need. But we can always try to get them close to whole again.
Got it. So, and I think that's important too. Like when we're taking an individual policy, we have to account for what we have in a group plan. We can't over-insure ourselves on the disability side of things. Is that correct?
Right. So when you're asking your client these questions, if they have group coverage, just be sure to always get the percentage that they have through their employer. Typically, you're looking at 50 or 60%, but those do vary based off of their employer, as well as if there's a cap on the policy. Typically, again, we are looking at a $6,000 cap, which will come into effect again when you have your higher income earners. And don't forget to separate their base and their bonus, as those are looked at differently depending on group insurance and individual. So a breakdown is always the best to get from your client so we could have the most accurate analysis.
Got it. Well, thank you, Kourtney. This is just enough information to be dangerous when we're out there in the field and we're talking to our clients with that. Again, as an agent, you don't have to know all of this. It's just enough to have that conversation. Always come back to us, come back to Kourtney. Let us know what your client's situation looks like on paper, and we'll help you out, from that standpoint. Get to illustrations, get to concepts, even get on the phone with your clients and walk them through and educate them through what they have. Kourtney, anything else you can think of that's helpful here?
I think that's it.
All right, awesome. Well, thanks, Kourtney. Thanks for all this information. Very helpful for everybody watching. Thanks again for joining us. Go to riskassociate.com. You can find our information on our website. Don't forget to like us on LinkedIn, follow us on our YouTube page, and thank you for joining us. We'll see you all next time.